Good morning and welcome to the Helium One Global Limited Technical Investor Presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated in the right-hand corner of your screen. Just click Q&A, scroll to the bottom, type your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to David Minchin, CEO. Good morning.
Good morning, everybody. I'm David Minchin. I'm CEO of Helium One. I would actually like to start this presentation with an apology. Poor pobl Gymraeg, rydw i'n ddrwg. I thought the game started at 10 p.m, not 10 a.m. I understand, as a Welshman, I don't often need to pay attention to World Cup schedules. In fact, I haven't had to in my lifetime so far. However, like me, you probably paused it after the first half, and I'll be watching the rest straight after the game. If anybody wants to put score updates into, so on to the business of the day, Helium One. So this, as people know, we've had a long year of Helium One, and this we've had to battle operationally against the headwinds of some of the highest oil prices in history, low rig availability, and the challenges which have come with that in preparing our exploration program to make our discovery drilling in Rukwa. I'm pleased to announce that we have now overcome all those challenges. We have a rig secured, we have services secured, and we're ready to drill in Q1 of 2023. With that in mind, I thought this would be a timely opportunity for us to present a technical presentation. This is sort of update on what we've done over the last 12 months from a subsurface point of view and from an operational point of view. The work that we've done in advancing the Helium One project, and in making sure that we're operationally ready to give us the best chance of making a discovery when we recommence exploration drilling early next year. So this is going to be quite an in-depth presentation. If this is your first Helium One presentation, it's probably not the ideal place to start. It's focusing more on long-term holders and people who are actively acquiring on the market, and a chance for the technical team to tell you what we've been working on. Over the course of the presentation, I'll be handing over to Lorna Blaze, our principal, whose knowledge of African systems, and Mike Williams, our drilling superintendent, who is experienced in organising drilling operations in remote parts of the world, and again a highly focused African operator. There will be a period of Q&A at the end, as we said. I'm just going to quickly talk over Helium One, and we talk everyone through a brief market update on what's happened in the helium sector over the last 12 months. There's been a lot of change. So Helium One remains focused on development through discovery. We're exploring the Rukwa Basin in Tanzania, which is a world-class province for primary helium. This is high-grade helium without associated hydrocarbons or greenhouse gas emissions. We have an advanced exploration project at Rukwa, where we are returning to drill Thai, where we have got all of the indications of a working helium system and our best chance of making a discovery to unlock an entire province of 3,500 square kilometers of licenses. Helium demand has remained robust. As I've talked about previously, helium is a range of properties which makes it unique and unsubstitutable in a range of high-value, high-tech applications. It's used in a broad range of end users, and it cannot be substituted. There's been significant demand growth. If you look at this chart here, comparing the 2019 demand sector compared to 2021 sector, you can see that the strongest growth has been in the electronics sector. This is in semiconductors and in fiber optics. Helium is essential in the production of these high value and high demand sectors, and we've all seen and heard about the troubles that the Western economy has securing enough semiconductor supply. These are important, and this is driving strong demand. In fact, the increase in demand has priced out a lot of the lower value applications, and we believe there is a latency in demand which would be accessed with a greater supply. The supply side itself, however, is looking pretty grim. At the start of the year, the Russian invasion of Ukraine knocked about 2 billion cubic feet of supply off the outlook. This is the Amur project in Russia, which is now not going ahead. There are no Western helium companies which want to be involved in that, and all of this extra supply is not happening. This leaves a huge gap in the market, as existing byproduct producers of helium from hydrocarbon cannot increase their production to fill this gap. This is why there is a requirement for new helium discoveries to be made, and for new primary helium projects to come on stream to fill this dramatic shortfall. The helium shortage triggered in 2019 by the closure of the US Federal Reserve is not going to end. There is no light at the end of the tunnel unless discoveries are made. This is obviously reflected in pricing, which has seen a strong 8% CAGR increase over the last 20 years, but has seen astronomical increase over the last few years. We again use long-term import pricing into China as a window into the market, and we're seeing contract pricing at over $400 per MCF, which is the first time that it's broken through that ceiling. We're also seeing spot price at over $1,000 an MCF for smaller cargoes. This is driven by this huge demand and a lack of supply. People will secure helium at any price. And on Tuesday, we saw an announcement by NASA that they have inked a deal to secure approximately 1.2 billion cubic feet of helium over the next 5 years, at a fixed price of $920 per 1,000 cubic feet. So per MCF, $920 for NASA. Now, that is higher than the current helium price. Presumably the rationale is that the scientists at NASA believe that over 5 years the price will exceed $920 per MCF, and they will be receiving a bargain. And also there's that desire to secure helium, which is irreplaceable for the ambitious space programs which we have planned. Well, obviously, the scientists from NASA think the helium price is heading to the moon. And this is where we come in with our exceptional project at Rukwa, which can take advantage of this shortage of supply, this high demand, high price environment, to really maximize on the benefit for our shareholders. With that, a brief update. Our Lorna, subsurface team. Thank you, Lorna.
Thank you, David. Lost you there a little bit at the end, but I think you had finished up. So good morning to you all, and thank you for dialing in for this session. I'm Lorna Blazer, Principal Geologist at Helium One, and it's my job to now walk you through some of the technical work that we've been undertaking to date across our projects in Tanzania. So many of you will be familiar with helium projects and others of you less so. So I'll take you through what this clean, low carbon, high demand resource means to us, not only at Helium 1, but also to Africa and ultimately the rest of the world, as Dave has just alluded to. Helium is a commodity that's in very high demand, but also in very short supply, and that is irreplaceable in many of its uses. Currently, we hold just under 3,000 square kilometers of licensed areas in Tanzania, encompassing the Rukwa Rift down in the southwest-hand corner of the country, and also the Balangida and Eyasi Rift basins up towards the north. And all three of those basins sit within what we refer to as the East Africa Rift Trend. Our acreage sits within the largest high-grade undiscovered helium resource in the world, given its unique geological position within this rift trend. And we're well positioned within areas of known surface helium seeps, which have up to 10.6% helium, which is huge. We successfully drilled our first well last year, which enabled us to significantly de-risk the Rukwa Basin, as we were able to encounter multiple intervals with identified helium shows. We're a very small team. We've been very busy, but we're fortunate enough to have an experienced and focused management team and also board. Some of you will already know that the company was founded in 2015 by a couple of mining geologists out in the field in Tanzania. They were made aware of seeps that were actually identified back in the 1950s. They went out to the field in their land cruisers and resampled these seeps, but they didn't go alone. They took leading noble gas global experts. They went along with Chris Ballantyne, who is based here in the UK at the University of Oxford, and also Peter Barry, who's based at the Woods Hole Oceanographic Institute in Massachusetts. They resampled these seeps and also identified new ones, and the results of those studies revealed a 10 to 90% helium-nitrogen mix, which is huge. It's very pure. It's very unusual to have such a pure mix like that. And the results of that work yielded that the helium was the helium-4 isotope, which is derived from radiogenic decay of uranium and thorium deep within the Earth's crust. It is the deep-seated crustal breakup between the Tanzanian craton to the northeast of the Rukwa Rift and the south of the Eyasi and Balangida rifts, and sandwiched between the Tanzanian craton and the Ubendian belt, which over geological time has broken up. And as a result, this has set up a unique geological setting for helium occurrence. We refer to our licenses in Tanzania as being located in what we call the Goldilocks zone, because essentially the geology here is ideal for this helium helium release and ultimately accumulation to occur, as well as the alpha decay of the uranium and thorium within the ancient crust. The craton's also undergone a correct thermal regime that's necessary to release and liberate that helium, and everything has to occur in the right geological sequence for it to be released into that sweet spot. Research by the University of Oxford has undertaken a study several years ago that suggested that over 700,000 BCF of helium has been generated within the craton over the last 2.5 billion years. Obviously, the question is, where is it, and how do we tap into it? We know it's there. We have evidence of it in the surface seeps, and Helium 1 are now fortunate to have that downhole information as well. So our focus now is to be the first primary helium explorer to confirm the presence of helium in Tanzania and pave that way in exploring for it in Africa. This slide shows the extent of our currently held acreage within the Rukwa Rift Basin. We've just undergone a recent relinquishment of a number of our licenses, and we currently hold around 1,900 square kilometers of prospecting licenses in Rukwa, and we hold another 1,000 square kilometers split across the Eyasi and Balangida Rift basins. The timeline on the right-hand side of the slides highlights the steps that Helium 1 have taken to get where they are today. The basin was actually first explored back in the 80s by Amoco, an oil and gas explorer, and they went out and acquired 2,300 line kilometers of onshore and offshore legacy 2D seismic data. They then went on to drill 2 wells in the basin. They drilled the Avuna well just north of our Tai well, and the Galula well down in the southeast corner of the rift. They were prospecting for hydrocarbons, and both wells were dry holes. They were abandoned, and Amoco exited the basin and never returned. In 2015, Helium One were awarded their first licenses after validating those surface seeps, and brought with those experts from University of Oxford and Woods Hole. And quite quickly thereafter, in 2016, they went out and acquired soil gas surveys across the onshore areas. So this enabled them to cover much sort of larger areas of ground and validate those seeps even further. And they also went out and acquired an airborne gravity gradiometry survey covering over 15,000 line kilometers in Rukwa, and also a slightly smaller survey up in the Balangida Basin, over 1,500 line kilometers. And then early last year, which is when I came on board, the company set out and acquired 197 line kilometers of 2D seismic. And the purpose of this survey was to firm up leads that were previously identified on the vintage Amoco 2D seismic. And then, as many of you will know, in June last year, we spud our first well on the Thai prospect. After drilling Thai and towards the end of last year, we went out and acquired a second 2D seismic survey. I'll show this on the next slide. And we also acquired a multispectral satellite spectroscopy seep study to enable us to further identify additional surface helium seeps, as well as a shallow electrical resistivity, or what we refer to as an ERT survey, to aid identification of any shallow gas. So it's been a very busy 12 months. We've not been sat around twiddling our thumbs. There's a lot of work that's been going on, and we're now continuing to plan for our drilling campaign next year, which is going to keep us even more busy. The image, next slide. The image here on the left illustrates the amount of data available to us back in 2016. You can see the Amoco seismic illustrated by the white lines, and they overlaid the AGG survey. You can also see the identified surface helium seeps, which are represented by the blue triangles. It was this interpretation of this sparse 2D Amoco data that led to the identification of those early leads, and enabled the company to focus their sort of area of interest over Thai to come in and acquire the infill seismic. So the same image on the right highlights where effectively we are today. The additional infill seismic was acquired. So the phase 1 survey is highlighted by the yellow lines, and the red lines to the north represent the phase 2 work, which was planned along the sort of northern extension of the regional highs, the Thai High and the Itumbula High, as well as against the rift margin itself. Because these rifts are active present day, there's very extensive faulting that's occurred over time and also more recently. So we've been guided by not just the seismic, but also surface expression of these faults that you can see quite clearly on satellite imagery, and also the AGG data. This proved to be an incredibly powerful data set to us, and enabled us to firm up quite a complex fault correlation on sparse 2D, and gave us confidence in what we were attempting to map out. So the work last year, including the well, it provided a sort of proof of concept for us. It's enabled us to reduce our exploration risk in the Rukwa Rift Basin. And drilling the Thai prospect demonstrated to us that we very much have a working helium system here. We have good evidence of good to excellent quality reservoirs, the presence of thick sealing units, and also those fundamental helium gas shows that were identified during drilling at multiple prospective intervals from surface down to TD, to total depth. The shallow ERT surveys were acquired earlier this year. They were focused over our sort of higher ranked prospective areas, the results of which we're still integrating into more of a regional story. Working as a geoscientist is very much piecing together a very large jigsaw puzzle with very, very small pieces. So it does take time, and the story does continually evolve. But it's been a very useful data set for us. This slide illustrates part of the multispectral satellite spectroscopy study that we conducted over the entire license areas across all 3 basins this year, the beginning of this year. This technique has actually been very widely used onshore Australia and the US for similar projects, not just helium, but also hydrogen, and has proved to be very successful. I was fortunate to see some examples of this work prior to conducting it ourselves. It's identified abundant near-surface helium anomalies for us within our acreage across all 3 basins, which is obviously supported by those surface seeps that we know about. We were then able to integrate and calibrate it to the seep information that we have, and ultimately that's improved further our understanding of helium migration within the basin. The 2 examples I show here are actually of the Itumbula seep close to Tai, and the example at the top of the slide is the Tai prospect, and you'll note that there's quite a large surface anomaly located just off structure to that against the main bounding fault. So, you know, the team have done quite a lot of work in evaluating these anomalies and how they might fit with the subsurface structure, but also that surface expression as well. So, sorry, just changing the slides. Located, the Rukwa Rift is located on the western arm of the East Africa Rift system, and it's thought to be quite a lot deeper than a number of the other rifts in the trend. It's undergone a slightly different tectonic regime. We understand the tertiary rift sequence, which is the younger sequence, to be comprised of continental fluvial deltaic sequences made up of what we refer to as the red sandstone group and also the lake bed formation. And the Rukwa Basin is actually quite unlike a number of the other basins along the East Africa Rift trend. It's underlain by much older Permian Karoo sequence, which you don't see elsewhere in the East Africa Rift. You're focusing more on the tertiary basins. And that Karoo sequence sits on top of ancient Proterozoic Archean basement. I mentioned that at the beginning about it being the source for the helium. And you'll notice on that stratigraphic column in the central part of the slide, you see where we've identified where we encountered those helium shows whilst drilling the Tai 1A well. That's represented by those blue circles. So, you know, multiple intervals from surface to TD where those helium shows were encountered. As geoscientists, we very much understand the helium system to be analogous to that of the petroleum system, as the table shows. The main differences really are that the source component, you know, here with helium, it's radiogenic. It's not relying on a source rock or a kitchen that we refer to in the petroleum world, and also maturation. You know, we don't require that source rock to be cooked, to be buried deeply, to be thermally mature. We still do require the long period of geological time because we need to allow that alpha decay process to occur and generate and release sufficient volumes of helium. All of the other components, for all intents and purposes, very much remain the same, or we're adopting the same exploration techniques that have been used in the petroleum world for decades. So our exploration model basically considers all of those other components to be the same. This geoseismic section through the southern half of our AOI in Rukwa highlights the types of plays that we're targeting in our exploration program moving forward. The interpretation of the phase 1 and phase 2 2D seismic illustrates the presence of those classic sort of continental extensional rift faults that you see within these rifted basins, rotated fault blocks reliant on cross-fault seal or fault sealing properties. The Rukwa Basin has also undergone some localized inversion controlled by underlying older shear zones, which has led to the development of some faulted three-way closures like that we see at Tai. And it's these deep-seated faults that extend all the way into basement, you can see from the diagram, and right up into the shallow stratigraphy, which we believe to be the main conduits for the helium to migrate up through the stratigraphic section. The red sandstone group is very high net to gross. It's predominantly sand. It's very few claystones or interbedded shales within there. And it's our understanding that this is likely to act as a carrier bed through the basin, so moving that helium laterally and vertically through the system. As well as structural styles, we're also exploring for stratigraphic closures as well, the more sort of unconventional closures, particularly along the rift margin. And we're also considering other play types like fractured basement plays as well. This slide summarizes what the Taiwan well drilled last year. So it targeted this robust, large, faulted three-way closure that was mapped at multiple levels. The map here is showing it at the Karoo level. And the well, it was intended that we would reach basement. This was actually our secondary target. But unfortunately, as I'm sure you're all aware, we encountered many technical issues with this well and had to TD the well early. However, as I mentioned, the helium shows were there. They were backed up by our Mini Rudy and micro GCMS plumbed into the flow line, and we had these shows encountered above background throughout the Karoo, red sandstone group, and the late bed sequence. So these results have been significantly encouraging for us as a company, for the basin, for the play, and it's our objective early next year to re-drill this Thai prospect with a bigger rig, a conventional oil and gas rig, with much better technical capabilities. The challenges we faced last year were partly due to using a small mining rig with limitations on its mud system, logging capabilities, in a slim hole design. You'll see on the text there some of the challenges. I won't labour the point. I think it's been a learning curve for all of us, and moving forward to next year can hopefully only mean better things. As a company, we obviously remain focused and committed to re-drilling of Thai and hopefully making a discovery on the Thai structure. This slide attempts to illustrate some of the new mapping that's been undertaken over the Thai structure, integrating that new phase 2D seismic that we acquired last year, as well as those surface seep anomalies from the multispectral satellite spectroscopy study. And the new dip lines over the structure, which previously last year when we drilled Thai, we didn't have those additional lines. We had strike lines over the structure from the phase 1 survey. And these new lines have confirmed the position of that bounding fault, the western bounding fault that we always knew was there, but we didn't quite know the exact sort of location of it, given that we were dealing with strike lines. So we now know that we actually intersected this fault where previously we didn't think we had. We now have a better understanding of the angle of that fault and where the well penetrated. And as a consequence of this, I mean, this is part of frontier exploration and using 2D data. It does happen. As a result of it, the late bed sequence was tested out of closure on the hanging wall side of the fault, and therefore any additional sort of upside on the late bed level was potentially missed. And similarly, the Karoo target using those additional lines has mapped out to be slightly larger than we had previously, and there's potential that there's now an updip upside just to the north of the structure that we had previously misunderstood or not had the data to fully evaluate. But the Thai structure still very much remains our lowest risk within our portfolio. It's our largest mapped prospect, and we're very much excited by re-drilling that next year and to see what those results will bring. Let's not neglect the other basins. By default, obviously, a lot of our efforts have been focused on Rukwa, again, being a small team, and we've got to push on with the work program over Rukwa for the next phase of drilling. However, Ayasi and Balangida have not gone unnoticed. I'm busy working those up in parallel. We actually had a team out in the field earlier this year to Balangida to revisit some surface seep locations and using the multi-satellite spectroscopy work to ground truth some potential new seeps out in Balangida. We're also currently undertaking a gravity magnetic study with GTEC here in the UK to evaluate the depth to basement and better understand the rift geometry in both of these basins, with ultimately a view to hopefully planning some seismic next year. That's ongoing. I've seen some first deliverables of that study this week, which is very exciting. Some really interesting results there, which I'm sure we will share in due course. So right now, our immediate focus is obviously on the drilling campaign for Rukwa next year in Q1, and where we will re-drill the tie structure with a conventional oil and gas rig, and hope to demonstrate that there is an accumulation of helium. I've probably spoken for too long. David is probably hitting his head against the wall because I've been talking too much technical and too much geology. So at this point, I'm going to stop, and I will hand over to Mike Williams, who is our drilling superintendent, and he will take you through the operational side.
Perfect. Thanks, Lorna. So as Lorna said, my name is Mike Williams. I'm the drilling superintendent for Helium 1. And today I'll be running through the operational update of what we've been up to as a team and what we're planning to do later this year and into Q1 2023. So as Lorna rightly said in her closing comments, we've signed an MOU with Exalo. Exalo are an international drilling contractor specializing in the onshore environment. They have excellent experience in sub-Saharan Africa, which is a key area for us. They're offering us a 1200 horsepower conventional land rig. What does that mean for Helium 1 as an organization compared to, say, phase 1 or drilling in general? Well, it's all about more of everything. It's this more power, it's this more mud volume, it's greater pumping capacity, it's greater well control. It's a rig that can use triple stands. That all gives us more capability and it adds value to our project. So we can take this rig and take that step change that we needed to make from phase 1. Also, what is absolutely hugely beneficial to Helium 1 is that we're taking a hot rig. Now, you may have heard of this term before, but a hot rig is a rig coming directly from a previous operator. That's beneficial in a number of ways. It benefits us in terms of experienced crews. It benefits us in terms of crew competency. And ultimately, because the equipment is being used, it means that it's certified, it's up to date. We know that it's working efficiently and effectively. And that's massive when we compare that to the opposite end of the spectrum, which is a cold stacked rig, or in the middle of the spectrum, which is a warm stacked rig. So this is the best option available, and we've been very fortunate enough to secure that. Of course, Exalo have been on our radar for a while. You would have seen in our latest RNSs and our press releases that we did look at them very closely previously, but due to timing issues, they weren't available. So whilst we have pivoted very quickly over the last couple of weeks, this is not a new area for us, so our due diligence is up to speed and up to date. So good news on the drilling rig capacity side of things. We've got to remember that's only one part of the equation, and there's multiple parts that we'll be discussing through my section here. So the next part is a well design. We mentioned that we had a conventional drilling rig, and this year we're hoping to deliver a conventional well design. What does the word conventional mean in this context? Well, it's conventional hole sizes and casing sizes that the industry, both the oil and gas industry and the exploration industry, are very much used to using. That's hugely beneficial again for us, because that is our bread and butter. That is our tried and tested techniques. It's what we do as an exploration company and as an exploration set up to do day in, day out. So what we are not trying to do is push the technical boundaries, which makes our operations difficult and higher risk. We're trying to do what we know we can do, that has been tested in the past, and that will be successful in the future. Clearly, with that, conventional well design is about delivering something that's safe and efficient. Clearly, safety is paramount in operational work scopes. We are working in an environment that does carry risk from an operational point of view, and therefore designing our wells in a conventional manner, we try to minimize that risk profile. And the emphasis here is very much on doing the basics well. I'm sure we can all appreciate if we do the basics well in whatever spectrum of life we come from, that generally leads to success in the future. So we've got a suitable rig that we're very excited about. We've got a great conventional well design that the team have been working hard on over the last couple of quarters. Again, we need to combine that with our third-party services. And you'll see on the slide there that I've named 4: cement, mudlogging, drilling fluids, and wireline. That's not all of them, but clearly for those that are used to exploration or drilling of wells, they're the big hitters. And our relationship with third-party service companies is paramount here. And you would have seen on previous press releases again that we've signed an MOU with Baker Hughes, and they're delivering our cement, our drilling fluids, and wireline. This is huge news for Helium One because Baker Hughes are an internationally recognized and renowned company. That means we are going to get quality equipment, quality people, combining that with a good well design, combining that with a good rig. It starts to build strength in depth that we're going to have an operational positive outcome here. What won't have escaped your attention is that we're in sub-Saharan Africa and Tanzania, and logistics is a key part of this equation. Therefore, we've had to take a double-pronged approach here. We're using both local teams and international teams. The local teams give us that local knowledge, and it can be simple things like upcoming weather, how the road deteriorates over a function of time when we start moving vehicles over it. Are there any community liaison issues, etc., etc. We combine that with our international supply chain management teams because clearly we've got drilling rigs coming from outside the country, we've got capital equipment coming from outside the company, and we need to manage that. David mentioned some of the geopolitical issues around the world. That has also affected our international supply chain management, but fortunately we have now overcome those hurdles. When we start to talk about conventional well design and conventional oil and gas rigs, we're very fortunate that most of that equipment, if not all, comes with oil and gas certified equipment, and that's generally here API standard, which again is really good for us because we know that equipment is designed and tested to a very high standard, not a standard that we will be pushing our rig and our wells to, but it gives us that additional comfort level. Lorna briefly touched on some of the lessons learned from, or the challenges from phase one. That has clearly not escaped our operational team. We've spent a huge amount of time reviewing phase one and making those necessary step changes into phase two. Some of those changes we've already spoken about, that may be around the drilling rig in terms of the size of the drilling rig or the capacity. Some of it is around logistics. A lot of it is around well design, moving to this more conventional piece. So there's a lot of work here. A similar message to what Lorna said in her presentation. We've not been sat around idle, twiddling our thumbs, thinking about what we can do. We've been incredibly busy planning the forward operations to deliver success. What we mustn't take our mind off and our attention off is finding a rig and drilling a hole in the ground, which is hugely important here, but it's only part of the equation. The other part of the equation is about formation evaluation. It's about gaining that information out of the subsurface that we can feed back internally to our subsurface colleagues. Again, we've put a lot of time and effort into make sure that we're using the right tools and techniques and designing a well that can accept these wireline logging tools. That predominantly sits around drilling fluids. We haven't touched much on the drilling fluid piece today, but drilling fluids provide a huge part of the equation here. They cool the bits, they give lubrication, they transfer hydraulic information, they provide hydrostatic pressure to the well, which helps with wellbore stability, and the list goes on and on. So again, the emphasis on designing drilling fluids and our drilling fluid engineering in line with our partners, Baker Hughes, has been a massive piece here, ready for the well formation evaluation. Clearly, the objective here is to evaluate the reservoir. We want to demonstrate this helium gas accumulation, and ultimately we want to obtain a downhole representative sample. So this is a sample taken from the reservoir under pressure, volume and temperature conditions, and then transferred to the surface. During the drilling process, we'll be running various mud logging equipment so we can keep an eye on our helium shows. Lorna loosely touched on that with the Mini Rudy and the Micro GC equipment. Once we have those samples at surface, we will have an idea of the quality and the volume of that helium, but crucially we'll be sending that off for independent analysis and verification, because that gives us that gold standard there. So there's a lot of effort here going into logging, which is the second part of the operation. So we've got to take a three-pronged approach. We've got to have the right tools and the right contractor. We've covered both of them. That's Baker Hughes. We're spending the time and the effort, understanding the tools, working with our colleagues to make sure that they're in the right place at the right time, prepared in the right way, and are able to detect what we need to detect, i.e. helium. We are happy and confident at the quality and standard of Baker Hughes. So they're the first two prongs. The final prong is having that strong, multifaceted operational subsurface team. You've met some of them already multiple times. Lorna heads that up very well. We've also got a number of other people in that team that have huge amounts of experience that give breadth and depth to what we're doing. So when we combine that together, we've got a strong operational team focusing on formation evaluation. We're also confident and we're also planning for success. And what do I mean by that from a kind of operational point of view? Well, some operators, some exploration companies may wish to stop once the well has been evaluated and call it quits. We're trying to plan for success. We're trying to think ahead. We're trying to deliver best for our shareholders and Helium One as an organisation. And how are we going to do that? Well, as soon as we've completed our formation evaluation, we will run casing and cement that in place. That will be cemented across all the intervals from top to bottom of the well. That enables us to suspend the well. And the emphasis here on the suspend, not plug and abandon, which is the other type of operation. Allows us then to come back once we've analysed all the subsurface data that we've gained from the logging and our downhole representative samples, and we can come back, re-enter the well, perforate at the required intervals and test the well. Now this is very much an appraisal style operation, but what we're doing here is trying to compress and combine exploration and appraisal into one well. That is hugely beneficial for Helium One on a timeline basis. We've seen David's slides around the void in supply and demand. So we can help with that by taking these necessary steps, but also we can deliver great value for the shareholders. We may decide to drill multiple appraisal wells, but we can use this well as an appraisal well by running this casing, coming back and perforating, and then flow testing and gaining that additional subsurface information that we require. So finally, from me, some key takeaways from my area. We've learned a lot from phase one. We've put a huge amount of effort in making the necessary step changes that we need to succeed. That's work that doesn't always look very apparent from the outside looking in, but will pay dividend when we start drilling in Q1 2023. We've talked about the rig. We're very excited that we've got Exalo on board. We're very excited with the rig that they're offering us. It gives us that additional capability. It gives us that additional power. It gives that additional optionality for when we get into the operational piece. We've spent a massive amount of time on well engineering and formation evaluation, as I've discussed. The formation evaluation bit mustn't be forgotten when we're talking about drilling of the tie structure. We're engaged with international third-party services. We've spoken a lot today about Baker Hughes. There are a plethora of other third-party service companies who are of equal standing to Baker Hughes. So please be rest assured that we've not just put all our eggs in one basket. Those eggs have been scattered across the piece, and we've used top quality organizations. And finally, maybe a somewhat slightly biased comment to conclude with, but we do have a strong Helium One team. When you look at the people in our subsurface team, you look at our senior management team, you look at our operational team, these are all people that have worked across the exploration frontier spectrum for a good number of years. So when we are given the right tools and the right timeframes, we have the power to enable us to succeed. So that concludes my section. Thank you very much. I will hand back over to David.
David, hi. Thank you. I think your mic is open just to connect. Do please bear with me, ladies and gentlemen, just connecting David as we speak. Please bear me 1 second, David. The microphone is just not connecting. David, unfortunately, we seem to be having some issue with your microphone and your connection. Just bear me 1 second. Please bear with me, ladies and gentlemen, just while we connect David back to the event. David, we can hear you now. Thank you very much indeed. Yes, we can. Thank you very much indeed.
And the camera is not okay, but at least you can hear me. Thank you very much, Mike, and thank you very much, Lorna, for that detailed presentation. And thanking Mike and Lorna first because they put their hands up to make this presentation. But I'd also like to thank Colin, Chris, Graham, Owen, Kai, Anna, Fidelis, Godfrey, Goldeni, Russell, Bronwyn, Sarah, Nigel, Robin, James, Ian, and everyone else who's been involved in working on bringing the project to where we are now, ready to drill in Q1 of 23. Now, the discovery at Tai is just the first step for what is a long journey in this company. As Mike said, we will be completing the well as a production well, which will allow us to fast track tie into production, targeting first gas flow in 2024. As Lorna said, we have focused in on tie as our lowest risk prospect. We've only completed additional 2D seismic over less than 10% of our license areas. There is huge upside on our remaining 3,000 square kilometers of license to grow the project into a monster. We've barely touched on the potential of Ayasi and Balangida, where we know we've got good salt-bearing horizons which can form excellent sealing properties. The concept would be to make these discoveries as we're producing from time and expand our production through modular development in Tanzania. However, as you can tell, we have a very large and experienced team, and we have a number of pipeline projects under review around the world, which would allow us to grow Helium One into a globally strategic exporter and producer primary helium for this high demand, high value, low supply product. That is more or less it. We have got maybe about 10 minutes for a Q&A. So do I come off the screen?
You can stay exactly where you are, David. Thank you very much indeed to the team for the presentation. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated at the top right-hand corner of your screen. Just while the team take a few moments to review those questions submitted today, I'd like to remind you the recording of the presentation, along with the published Q&A, can be accessed via your investor dashboard. Perhaps before we go into some of the live questions there, David, we did have a number of pre-submitted questions, and we've had a few of those that have got a similar theme that have come through from those in the live. So if I may, let me start with the first one. What is your cash position? Is this enough to cover your drilling program, or will you need to do a fundraise before drilling? And that's very similar to the likes of Tim, Nicholas as well, who submitted questions. So thank you to those.
Yeah, sure. So with regards to cash position, there's not really, I can't really disclose much because we're in a closed period leading into the publication of our annual results.
David, we seem to just briefly lost.
And imagine we have maintained a very prudent approach to capital conservation. We have maintained a low burn rate and conserved capital where we can. All this means that we do have cash in the bank. Then as for a fundraise, well, I mean, the question is, do people want to invest in Helium One? And if they do, why? Now, we've seen the volumes in the market since Tuesday. We've had over 50 million trades, which at 8p is a significant amount of money being traded on markets. So people clearly do want to invest in Helium One. And I think the reason why is that we have got a number of medium-term and long-term catalysts, which make holding this stock an attractive proposition. In the medium term, we have a lot of news flow coming up with the commencement of civils work, with the contracting of the Exalo rig, with the release of the rig from its current operations, commencement of mobilization, massed up, and eventually drilling. All of this builds a very positive critical mass as we're advancing the project and delivering on expectations to commence drilling in Q1 of next year. However, beyond that, for a long-term investment point of view, Helium One offers significant opportunity beyond the initial discovery as we fast track into production, as we take advantage of the exceptional and unique geological settings that we have in our portfolio of three projects, to grow the company of helium supply, which is, as we've said, heading for record price highs in a high demand, low supply environment. So it's a question of being the right commodity at the right time and with the right people and the right geology to deliver on a success of an investment. And money spent in the ground, which we're being very frugal about, and ensuring cost-effective exploration techniques, offers the potential to bring to add value to the project and to bring good return to all investors.
That's great, David. Thank you very much indeed. The second question we've got here is, I guess, 4 questions and covers a number of those that we've had through as well during today's session. Can you provide more details on the drilling program? When will the new pad be ready? How many wells are you planning? Will you be flow testing, drilling appraisal wells? I know we touched on that through Mike. And will you be drilling other prospects apart from Thai?
I think a few of those questions have been answered in the presentation, so I won't repeat over them. However, as said, the primary target is on Thai. We have a 1+1 operation planned. We are already relatively advanced in our contract discussions. We're having exchanged draft contracts, and both us and Exalo are motivated to execute on contracts as quickly as reasonable. Obviously, there's a lot of commercial negotiation going on, so there's not full details I can give on things like costing and timing, etc., etc. However, the target remains as Q1, as we've stated, and we have an exceptional program and a very, very busy year ahead of us. And I say not just between now and the end of this year. 2023 is going to be phenomenal, and again, thank you to the team who are going to help to achieve all of this.
That's great, thank you, David. Next question, we've got any offtake agreements in the pipeline?
So offtakes and indeed farm outs are all things which we would consider as part of our funding package to bring the project into production. Offtakes, obviously, the closer you are to production, the more valuable the offtake becomes. However, what we've seen, and in conversations that we've had, there is strong demand for people to secure independent supply. You've seen that NASA recently signed a 5-year offtake with an average value of $920 per MCF. And that is to secure supply and not to disrupt their operations. There are many operators out there, Mitsubishi, General Electric, Volkswagen, all the Chinese firms which are producing and supplying semiconductors and fiber optics. They all require surety of supply. So offtake is not something which I'm losing sleep over.
That's great, and you kind of covered off the next question. We're talking about farm outs, farm ins. The next one we've got here is what volume quantity of helium would be needed to be extracted on an annual basis to make the venture viable for the long term?
So it's I suppose I'll answer that by talking about the margins. The economic studies which we've done so far indicate a production cost, and that's an operating cost of about $20 per MCF. Obviously, there's a lot of variables which will be considered once we've once we've made our discovery and completed all of our engineering studies, which will feed into and allow us to build a more detailed view on the economic picture. However, at an operating cost of $20 per MCF and a sales price at $400 an MCF plus, it becomes a very high margin operation. Capital costs, again, have been relatively low. We've heard of about $50 million for a production plant of 350,000 MCF a year, which is that's about 1,000 MCF a day, or one large truck a day. So you can see that if you would, when we've completed our engineering and we've confirmed these numbers, you'd be looking at a very low capex, high margin operation. The ability to pay back in initial capital costs very rapidly, ideally to secure financing through debt and through offtake to reduce the dilution to the shareholders who come in on the discovery, and to bring the project rapidly forward into production with a high margin. I hope that answers the question.
That's great, and I think some of these questions here we have touched on, but when will the contract for the rig be signed? When will you mobilise the rig? Will this be pre-year end? And how long will it take for the rig to travel?
Yeah, so contract will be executed as soon as practical. Both Exalo and I and us are keen to move that forward. The release date depends on the timeline on the existing operations. Our current expectation is for it to be released before the end of the year. However, as I said, it is engaged and contracted on other operations at this moment. And that point can move to the left or the right, depending on the decisions of the current operator. For us, I'm not, if we're 2 weeks later or 2 weeks earlier, this helium's been in the ground for billions of years. It's been released, it's been trapped, And for long-term shareholders, a 2-week time window shouldn't really make much of a difference. However, we understand, and we are aiming for Q1 of next year. I wouldn't want to be more precise than that because of a number of variabilities around rig release, logistics, etc. However, I'm confident that we can achieve a Q1 trading campaign.
That concludes the pre-submitted questions. I know I'll just come up to the hour, David, but perhaps we could just click on that Q&A tab, and if there's anything that really stands out at you, we could just address those. Otherwise, we'll have to respond to those post-event, which we'll publish back out on the platform. But if there's anything you did pick up there, please do read the question out and give your response or direct it to the team.
I'm anxious to score these in case some troll has put in a full-time score. But
they will now.
I'm not seeing anything here which jumps out at me. Mike or Lorna, have you seen anything which you would like to address?
No, not. Thank you, David. Not from my side. No, I think you covered off some of the questions around logistics and when the rig will come available. So no, thank you.
Yeah. Okay. Well, look, we will review these Q&As, which will come in live. It's quite hard for us to talk and read at the same time, but we will review them, and we will publish responses as appropriate.
That's fantastic. Thank you again for running through those questions and, of course, addressing the ones going forward. David, perhaps before redirecting investors to provide you with your feedback, which I do know is particularly important to you, if I could just ask you just for a few final closing words, please.
Yeah, well, as I said, thank you very much to all the investors who've taken time for listening to us. You can probably sense the feeling of excitement that we're feeling as a management team as we're coming closer to being able to get our boots back on the ground, get the rig on site, get it turning, make the well, test the well, prove all these subsurface concepts that Lorna has been working so hard with her team in developing to produce, this advanced exploration project and to identify, hopefully, a world-class resource of high-grade primary helium. It's been a long road. Thank you all for your patience. I think that 2023 is going to be a very, very big year for us. There's a lot of positive news on the way. And yes, we're all very, very excited. So again, thank you everybody for listening, and we will respond to the Q&As in the fullest of time. Thank you.
That's fantastic. David, Lorna, Mike, thank you again for updating investors. Can I please ask investors not to close the session? You should be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, and I know is greatly valued by the company. On behalf of the management team of Helium One Global Limited, we'd like to thank you for attending today's session. That concludes today's event. Thank you and good afternoon.
Thank you.